G'day everyone. This week I'm going to talk a little bit about China and the impact on Australia. The first chart I've got here to show you is the Hong Kong Hang Seng Index. It's a good proxy for China because it's a bit more of an open market and doesn't have capital controls like the Chinese stock market does. As you can see here, the Hang Seng has been falling all year. It's currently down around 22% from its peak early on in the year. And that just goes to show the damage that's been done from a lot of the, Donald Trump tariffs that he's been putting on Chinese goods. So the question is, when or will this flow through to Australia? Because obviously Australia, very economically tied to China. So I thought I'd have a look at a couple of our biggest resource stocks to see what the influence is there. This chart shows the share price of Rio Tinto. It's well off. It's come off its highs over the past couple of months, and we've had a recent rally. So I guess what I'm looking for is to see where the share price goes to now. If it starts to turn down again, indicates that Australia is starting to feel some of the bite from the Trump tariffs on China. Next stock I wanted to look at is BHP. As you can see there, that's gone the other way. That recently broke out to a new multi-year high, which is quite bullish. But keep in mind, BHP's got a big exposure to oil and energy, and oil prices have been very strong over the past few months. So the conclusion I've got at the moment is that Australian commodities are not hugely impacted by the issues between China and the US at the moment. But the Rio Tinto chart does show that given its exposure to iron ore, we need to keep a close eye on that, because if China slows down, it will have an effect on iron ore imports, which will then flow through to Australia and Rio Tinto. Thank you. That's it from me today. Thanks for listening, and be sure to click on the link below to subscribe for more market updates.